Hello, and welcome back to Sovren FX YouTube channel. Hope you all have been doing well. So, without further ado, let's quickly jump right into what we're expecting today on gold and the GJ. Let me just quickly set up some music. If the volume's too loud, leave it in the chat. Just regulate it. Okay. So right now, when you look at gold, this was the aftermath of the good US data that we received on Friday. The GDP figures, which were well above what we forecasted for. So today, since it's a Monday, let us quickly look at the calendar. So I'd say we are most likely having a pretty calm day, so we can look to rely on technicals, because if we don't have any economic reports to base our trades on, we're most likely going to execute based on technical analysis. So just by throwing a glance at gold, you know that this is a downtrend, or a bearish market, or a seller's market, whatever you want to call it, words to the same effect. So right now we're in the middle of 1965 and 1953 key level. So this is what I'm looking for technically. Okay, so today we've said that we'll base our entries only based on technicals. Okay, so if we get the next hour failing to break above 1961s all the way to 1964 and we notice signs of rejection, we're looking to execute our sells here. Sorry about that. Let me just quickly close this program. As I was saying previously, if we get signs of rejections around here, we're looking to enter shorts, having a stop loss at around 15 to 20 pips. And as you know, we have a 1 to 3 risk to reward ratio. Unless price action tells us otherwise, then we can close early. Okay, so this is the first trade we're looking at. Sells from 1961 200 towards 1953. So let us just wait for a 15-minute. Let us look at the 15-minute charts. We might get early entries today. Okay, so just give the 15-minute candle 10 minutes to close, then we are going to finally jump down towards the 1 minute time frame, so that we can get our sniper entries. But this is what I'm looking for today on gold. So let us go back to GJ. So right now we've been having rebalancing moves on GJ, since the Bank of Japan are most likely going to do an intervention, because the rate at which the yen is losing value isn't favorable to the economy of Japan. So you can look at the calendar, what happened last week, Friday. So during the BOJ press conference, they gave us signals that they haven't yet actually switched their monetary policy, but they're looking to move from their ultra loose monetary policy towards a tighter monetary policy, and this would give the Japanese yen strength. As you can see from those signals, what happened last week, price shot all the way down to, I'm sure this is intermonthly lows of 176 before coming right back up towards 183. So this was just count the number of pips. This was approximately 600 pip move from the market open. So we were actually lucky with the private group to get a chance to execute our buys here during London for around $100 pips. So right now, as you know, on GJ, as usual, because we're looking at technicals, today we have bear market, no economic data or news whatsoever. So if we get a pullback on GJ to around 182,500 and we notice that price is failing to break and is holding above 182,500, we can execute short-term scalps on GJ. I'm not looking to play intraday trades on GJ because GJ is still volatile. Until BOJ comes out with a clear statement on what they want to do is when I'll be looking to hold intraday trades, those that run 100 pips. Otherwise, I'll just be capitalizing on the 10 to 20 pip scalps and calling it a day on GJ. So right now we just have to wait, because entering right now you're just entering buys on the highs, and this is just being greedy. Understanding how the market moves and the order flow, you know that we have to get a pullback before we can notice a break, because this shows me that there isn't enough momentum to break above 183,200 all the way towards 184 for new highs, the pre-pandemic highs, you know, after the pandemic came in. And since the Japanese yen is a safe haven, the investors moved their money from risky assets towards the safe havens, and therefore the Japanese yen gained strength. We can just quickly catch a glance of what happened pre-pandemic levels. Let's reset this chart. The lows that came down all the way towards the 150s and the 148s, this was because of the pandemic, and therefore the Japanese yen and other safe haven currencies such as the Swiss franc and safe haven assets such as gold got inflated. That's just a method investors use to hedge their risk during risky times. So on GJ, that's that. I'm most likely going to wait for a deeper pullback for it to collect liquidity before I can see breaks above 183,200 and validate more buys all the way towards 184. I'll most likely want it to come and tap 182 flat. If not, we can execute anywhere in between here. Otherwise, this is a no trade range. I won't take any trades in here because the price action is choppy. So I'd rather wait for price to come all the way to 182,200, 182 area. So let me highlight that. Can't seem to find the tool. Okay, so here we have it. So this is the first place I'm going to look to enter buys. First area. Second area, if it breaks this area, this is most likely meaning that it's going to go down for a deeper pullback to collect more liquidity. we have 182 flat. Okay, I'm just highlighting the areas where I'm looking to enter trades. If price doesn't come all the way down here, I won't execute any trades. And finally 181,500. So this is for today's New York scalping session. You can monitor this in the event my stream gets cut off as usual. You can monitor this price action in the areas I've highlighted. So till where we've arrived at, if you have any questions, drop it in the chat before we can look to talk about anything else. Also, if you have a pair that is outside gold and GJ and you want us to look at it to give you an analysis, you can drop it in the chat. So let me just highlight. Where we're going to execute our buys on. I personally think 181,500 is a bit of a reach during this session, and you're not most likely going to tap it. So let's just monitor 182, 200 and 182 flat for our executions. So let us go back to gold. In 2 minutes we are most likely going to have a trade, sales, and I'm going to capitalize on, as you know, since we don't have fundamentally backed trades, I'm most likely just going to use it as a scalping opportunity. So after that candle closes, you can enter anywhere within this area. Just make sure price doesn't start closing above 1963. So personally, I'm already in a trade. I just executed at the close, so it's only a matter of managing risk, because trading is all about protecting capital, and just make sure you're not greedy. Also, if you have any questions, leave it in the chat. So as of gold, trading it without any fundamental backing, the moves can be slow, and that's why I'm preferring to look at the 15 minutes today and not all the way down on the 1 minute, because the 1 minute can be misleading, because you can get shaken off your trade by simple bullish closes above. All I'm trying to say is that price isn't going to move as smoothly as it moves, as it always does after economic data releases. For those who were here on Friday, you saw how gold melted beautifully. It ran approximately I think 300 pips, because it fell from 1972 all the way towards the 1940s. So let us talk about how we can manage this trade, because you can't always be 100%. You can't actually have 100% win rate every day, every time. So the only way I'm looking to manage this trade is if price starts closing above 1959.800, if you get 1 minute candle closing above and holding, I'm most likely going to manage my risk and wait for better entries. If price is going to tap 1961, you can execute once more. So until price does that, I think I'm just going to be in my entries, just waiting on that 10 pip to 20 pip scalp, and I'll close my trade and call it a day. For those who are wondering, my exact entry is 1959.5. So this is where I entered my short position, 1959.5. Yeah. So I'm currently up 5 pips, not even worth it. So I want it to get to at least 10 pips, then I can move my stop loss to break even, such that I'll have no risk on the table. Then if price chooses to fall further, well and good, but I'll most likely move my stop loss into profit, then let it run. Okay, don't forget to leave a like. Make sure you like the stream, share it. So the most I'd say the best scenario here is to continue seeing 1 minute bearish candles following each other up, and if we get a bullish candle, let's make sure it doesn't engulf the entire move, because if it does that, you have to be a little bit more cautious, and the price is most likely going to do a pullback before you see the drop. And it's better to close at -2 pips rather than the full 15 pips, and you can execute once more, because if you lose 10 2-pip trades, that's $20 if you're using so these are just arbitrary figures, so look at it in this light. If you lose 20, if you lose 10 2-pip trades, that's a 20-pip trade. So imagine the number of entries you've had, so that you can finally capitalize on the final move, rather than being stubborn and holding it for 20 times. So if you hold it, each entry towards stop loss for all the 20 times, you're most likely going to lose way more than the person who closes it early and waits for a better re-entry. So right now we are breaking below this area of sensitivity, and I would like to see this same bearish action go towards 1956. But as for me currently, I'm looking to capitalize on only around 10 to 20 pips. So as gold is doing its thing, let us quickly switch to GJ and see what GJ brought to the table. So not yet, as you can see, and I told you we can't enter trades in the middle of this range. This is choppy price action, and for clear breaks I'd most likely want to see it break above 183,200, retest, then I can capitalize on the moves. But as of right now, we don't have any entries on GJ. So let us look at gold.
A little too fast, I miss the days that we chill and relax. Where did the time go? It all passed, now I need to go back. I had no worries but always had plans. Only thing I did was take out the trash. Now it's much harder to laugh, hard to get up and then work on my craft. I need inspiration, don't need no validation. No more medication, just try some meditating. I don't need you to save me, feel like all of you hate me. Everything's been so hard with all the situations lately. I just need to numb the pain for a minute. I just wanna run away on vacation. I don't know what else to say now. I just need to numb the pain. I just wanna numb the pain. I just wanna run away. I don't know what else to say now. I just need to numb the pain. Well, maybe I'm done, maybe I've lost. Still putting up a fight because I love my mom, I love my family. When I was young, they would all look after me. I don't know why, but I feel like a burden. I spent my life overthinking my purpose. I can't really cry, I'm so used to the hurt. Trauma keeps flipping me at the wrong moment. I just wanna numb the pain for a minute. I just wanna run away on vacation. I don't know what else to say now. I just need to numb the pain. I just need to numb the pain. for a minute. I just wanna run away on vacation. I don't know what else to say now. I just need to numb the pain.
Just like the street lights lit this town, like a fire in a blaze, gotta burn it down. Can't be afraid to leave this out. We got this far, don't know how. I see danger in your eyes. They know we'll burn down the night. Coming just like the sunrise. You know that we gonna let it rain. Tonight, we gonna let it rain. Tonight, we gonna let it rain. Just like the sunrise, we gonna let it rain. Just like a spark that's breaking out. Can't make a stop, can't turn back.
As you said in the beginning,
There's no
the moves are going to be painfully slow, so just exert a little bit more patience, because on a normal day we'd most likely already hit our target and close the trade. But right now, as you can see, we are really struggling to get the push, but you just have to exert a little bit more patience. Also, don't forget, this might also be a loss, who knows. The most important thing is that you follow your plan and the risk management strategy that you have in place, because trades will come and go. No need to be personal with one trade, because the market doesn't care about you. Okay, so it doesn't have to give us this move. We owe nothing to the market, so whatever it gives us, let's capitalize on and call it a day. Just don't take any moves the market does personally. That's something I had to learn the hard way, because it feels like the market is always targeting you and only you, because after you enter a trade, it hits your stop loss, and it was say falling all that while. So for example, if someone entered a trade here, his analysis, everything was right on point, but he had say a 30 pip take profit. Price drives all the way towards 29 pips, doesn't hit his take profit, and since you are stubborn and don't want to close out the trade because you're too greedy, you want those 2 extra pips, price comes all the way back up, stops you out, then you stay wondering what happened. I think that's the problem with a lot of beginner traders. Don't take anything personally. Just after you enter trade, have your take profit and stop loss, then just sit on your hands. Manage the trade if you realize price is moving against you. Yeah, I think that's basically it for how I control emotions when in a trade, because in this trade we've had this 15-minute candle turn bullish quite a number of times, but I didn't close out because I know that's how the market moves. So yeah, that's just a little bit on psychology. So as I told you, there we go, there we get the move. I think it's beautiful how following your strategy and risk management concepts actually align. So just based on technicals, you've seen what we are able to do. Stops were at break even. Immediately we crossed the 10 pip mark, and I had my take profit at 1958 flat for 15 pips, which I got not sure what's the word for you. If your stop loss is hit, stops are hit, but if take profits are hit, so let's say my profits got hit at 15 pips, and I don't think I'm entering any other trade today. So for those who are holding, you can maybe hold it towards 30 pips around 1956, since this is a technically based trade. We don't have fundamentals backing it, but we can use the information. That's actually what I've done. I've just used the information that we received on Friday, the good GDP data from the US, to give me more validation to enter sales on gold at this particular entry. So it would have been better if we took it at 1961, but price didn't pull all the way up, so we had to wait for the 15-minute candle to form, then execute. So we executed on this second 15-minute candle, and price drove all the way for around 18 pips. And as we said, our take profit is between 10 to 20 pips because we don't have economic data releases or any news whatsoever in the market. So it's just bear market, not bear in terms of bullish or bearish, but plain bear, meaning plain markets, nothing actually happening. So price is most likely going to range up and down. So that's that trade. Let us look at GJ. What does GJ have for us? So GJ is painfully slow today. We'd have actually expected it to drop to 182,500 for us to execute our buys, all the way towards 183,500 and 184 for the new highs, but that is not the case. So in the event I close this stream and price drops towards 182,500, you can execute your buys. Okay, if you have any question, drop it in the chat.
Empty hearts and neon lights, they're playing with my mind. Gotta get out of here tonight. Oh, I wanna run off and fly, and I'll tell myself it's fine to be alone, just to find somewhere that finally feels like home. Oh, oh, oh. I hate all this overthinking. Oh, 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 oh.
As you can see, price on GJ is slowly chugging its way down towards our entry. So if we get it, well and good. If we don't, we call it a day and execute tomorrow. We will be there, same place, same time, New York session live streams. So there, I think we have the move. Let me not jinx it. But if price drops all the way to 182,500, then we have to get our eyes glued on the charts, drop towards the 1 minute time frame and monitor price. So as you can see, we need it only to make its way here. Then if we get a double bottom or a W pattern or a triple bottom or any sign that. So as for trading on the lower time frame, you don't have to master like 3 white soldiers, hammerhead candle, inverse hammer. No, nothing like that. You just have to watch candle by candle and dissect the information it gives to you. So in the event here, we got something like a double bottom here. Also something that beginner traders struggle with is looking for picture perfect setups. So if where you learned how to trade, they've shown you that a certain pattern will form, then you'll execute. It doesn't work like that. Very rarely do you get picture perfect trades. The market, so let me just quickly draw how the market moves and compare it to expectations of beginner traders. So beginner traders expect price to do this: retest, go, retest, go, retest, go. Highly unlikely that you'll get something like this. Very unlikely, because this is what price action is like. Look at this. So price did this, came back, did this before, eventually breaking out and creating a new high. So this is actual price action. So beginner traders lose a lot of money in this range. So price comes, breaks above, you enter buys, stops you out. Enter another buy, stops you out. Enter another buy, stops you out. Because you don't actually understand order flows and how the market moves on the lower time frames, and also the expectations that your teacher or guru or course gave you is actually wrong. So for example here, how would I execute? So for the first entry, if price broke above 182,500, this is what I'd do. I'd enter a buy. And in the event another 1 minute candle shifts out this move, so if it closes back below 182,500 and entirely engulfs the move, I'll close it out for 5 pips, then wait for price to actually make a high, then come back to the same entry area. I'll have my my buy limit, so price just comes, taps me in, and because I'm aware of the volume and actually how market moves when we have no economic data or news reports or anything of that, or anything towards the same effect, the market moves slowly and rangy. Therefore, I just enter my trade here, close out at 10 to 20 pips. If the same trade comes back, I'll enter 10 to 20 pips, call it a day. I will not fight the market. And if I lose 3 trades in a row, I close my charts and come back tomorrow, because after you lose more than 3 trades, your mind will go into a spiral. You actually won't make emotionally the decisions you're going to make aren't going to be a reflection of what you would have done if this would have been your first trade, because emotions will be, so while trading, emotions that you actually experience on a daily basis, they get multiplied by 10. So if you're somebody who gets angered easily, most likely trading isn't for you. You're likely going to get angered so fast that you won't believe it. So I think having a strike rate and positive risk to reward So for a strike rate is like the 3 strike rate for me. I enter 3 trades which are all winners, I call it a day. If I enter 2 trades which are winners and 1 loss, I call it a day. If I get 2 losses back to back, I also call it a day. That's just to make sure that once you lose, the trades you enter aren't revenge trades and are actually informed decisions. Also, as a beginner, if you enter a trade in the one in say between an hourly candle and you lose, just wait for the candle to close and enter on the next candle. Make sure you step back an hour, maybe watch your show, your favorite show, or listen to music, then come back when you're emotionally balanced. For the lack of a better word, it's emotionally balanced. So yeah, I think I've gone on a rant. Let's just wait for our entries at 182,500. Also, don't forget, if you have any questions, the chat is open. I'll be on here till New York Open. I think New York Open will be in... Also, New York has already opened. The New York session opened 15 minutes ago. I was used to the open in the next 15 minutes. So you realize during market opens and closes, that's when you get the volume moves. So for example, the New York Open, the investors come in, but not actually. I think the day traders come in during New York Open, and the actual investors and hedge funds and big financial institutions, they come in at NYSE Open, and that's where you're going to get volume moves for gold and other asset classes. So currently no trade yet on DJ. So I'm not sure if you can see exactly what I'm seeing. At the start of the stream, I told you that the movement won't be crisp and it's most likely going to range. Therefore, execute, capitalize on the 10 to 20 pips, call it a day. And this is exactly what's happening. Price is going to range. And if you're a stubborn trader, you can't stick to your strike rate. If you lose 2 trades within this range and still not call it a day, you'll enter a trade and you'll still lose it. Enter another, still lose it, and wonder why you are the market is targeting you. The market isn't targeting you. It's all a matter of positioning yourself to get the best entries and protecting your capital. That's always my priority, is to protect capital before you can look to make more capital. So I'm going to give GJ 15 more minutes. If you don't get this trade, I'll end the stream and you can execute it on your own. Just watch for the reactions at 182,500 and make informed decisions. Since we still don't have any questions in the chat, I'm most likely going to ask myself and answer the questions and see the best way I can benefit you for the time that you've taken to tune into the live stream. So we can tackle some trading psychology tips before, as we wait for GJ to give us our setup. So let's just talk about traders, retail traders' expectations. I think we've already talked about the expectations, but something just to add on, due to social media and how people always want everything fast and conveniently as possible, and on the path of very little resistance. So many people fall for the scams in the market and the courses, signals. So if you can't enter the trades by yourself, I don't think you should be trading first and foremost, because you always have to take accountability for the trades you enter. Because once you learn accountability, you can actually understand what's the problem in your system and fix it, and always look towards trading for the long term and not for the short-term dopamine hits. Trading is a long-term activity. I mean. So if you're just chasing quick money, in reality this will lead to failure in any industry, not just trading, because input equals output. You have to put in your 10,000 hours to master a certain craft. You don't just download a course or watch a YouTube video and you're a professional trader. Because if you look at the top paying careers and jobs around the world, like doctors, engineers, developers, lawyers, everyone takes at least 5 years to actually see success in what they are doing. So what makes you think that watching one YouTube video will make you an expert trader? I don't think so, because input is output. So if you don't put in your 10,000 hours on the charts, don't expect results, because if you get results, you get results only for a short term amount of time before you start getting into losses, and you can't handle the losses because you don't have the experience and you don't understand how the market moves and the time the market moves, and everything just builds upon itself with experience. And that's why we were able to scout out the move on gold. So this will be painfully slow. So let us look at gold. As you can see, gold came right back to where we got the first trade. So this shouldn't even be here because you already closed the trade. The only way I can look to re-enter is if price pulls all the way back to 1961, shows me signs of rejections. I'll execute my sales, targeting 1957 for around 25 to 30 pips. That will be the second trade of the day for me, and I'll most likely call it a day, because trading a day where there isn't volume and price is ranging, you're most likely going to get stopped out. Even if your idea is correct, price will just range stop you out before it does the move. So let us just look at the yearly charts on gold as we wait for a trade on GJ. So as you can see, gold is forever bullish. And for those who've been tuning in to the live stream, you know why this is the case. This is because gold is a safe haven, so it will forever be bullish. This is where and also because gold is a metal and it has real life applications and it is a scarce resource, it's limited. So all that put together, this means that gold will always be bullish, but whatever goes up must come down, or vice versa. Therefore, we have pullbacks and retests. So that's where pullbacks and retests come in, but gold will forever be bullish. So when gold is peaking, that typically means that the stocks and bonds aren't doing that well, because if you look at it, the market is just order flow, exchanging money from one pocket to another, except this is with big financial institutions such as the hedge funds, the banks, the central banks, and huge corporations. Therefore, if they move the money into gold, where is the money coming from? The equities. So the equities, for example, US30, this is an example you can look at when looking for confluences for trades. I don't want to actually get down on equities because that's not the point of this live stream. This is just to highlight the things you can look at in correlation to build up your confidence in entering a particular trade. Okay, so don't look at it on the yearly charts, you have to look at it on the hourlies. And you can watch the movement. Also monitor the news. I use FOREX Factory for economic reports and news. So here's the news. So watch out for breaking news. That's what gives you this moves up and those other moves down. So this 600 point move on US30 was a result of good GDP data from the United States. So the more I break this down, you realize that the markets are interconnected, and seeing that you only rely on technicals will be fooling yourself, because why wouldn't you want to have a full arsenal in your possession, having the fundamentals and technicals working side by side to give you the best entries and the best returns. Of course, that is if you're watching your risk management and psychology. Everything just has to go hand in hand. You can't work on one thing and forget the other. So history repeats itself in the market, so try and understand the fundamental catalysts that have shown to cause repeated patterns. Also, if you've been tuning into the live streams where we have economic data reports, you can realize that I can predict where price is going to go and how it's going to do that. This is because history repeats itself. So if I was trading US30 and we get GDP data is positive, you already see what price did. 600 points. So when this event appears again, what makes you think that price wouldn't do the same thing? Price will do the same thing simply because history repeats itself, and humans will remain humans, and it's humans behind the moves in the market. So if you want to work on your fundamentals, just look at history, know the current events, understand how key levels work, understand how banks trade, understand what tensions are going on. If you have trade wars, geopolitical tensions such as the invasions of countries, or what is just affecting the economy at large. So everything else aside from fundamentals and technicals is on the lower time frame, and includes understanding the market timing, market volume, session timing, and when the best time is to enter, which is mostly experience based. That's where experience comes in. So right now price blew past 1961. So this isn't a key level, this is just a medium term zone, because today we are basing everything off technicals. So this pullback all the way towards 1965 and a close back below would give you beautiful intraday trades from 1965 all the way towards 1953 for 120 pips, having a stop loss around 15 to 20 pips. So I'll most likely end the stream in the next minute.
Save myself by turning into stone. So save your judgment cause you just don't know. But some things never change, never change. Oh, they say I should feel guilty and change my ways, leaving crumpled bodies in my wake. Swear I didn't.
So let me give you an example of what you can look for after the stream has ended. Scenario 1, price moves all the way to 1965, gives you a pattern that validates that these buyers are losing strength and they are liquidating their positions, and the sellers jump back into the market to provide the exit liquidity. So those patterns are the triple tops, candles printing side by side, failing to break above 1965. This would be the first entry. Second entry is if price just ranges here. This shows you that the momentum for buyers is over, then closes below 1961, retests to tap 1961, then drops. So these are the two scenarios you can look at after the stream is over.
Open eye, feel the waves cut through me, hypnotized.
Okay, so without further ado, I'm most likely also what is. So we have impulsive bullish moves. I still don't see any news or latest stories which would warrant such a movement. Therefore, I'm going to sit on my hands. I don't want to execute on anything prematurely if I don't understand the move. So let me quickly just check on news outlets and understand what the move is about. But without technical or fundamental confirms, do not enter any trades.
So alive, make it last forever. Stop in time, yeah, I'm surrendering. Hold ground, shaking underneath, trying to take me alive. Get ready for the fallout. Can't stop me.
That is a risky place to enter. If you feel risky and it is so we were in sales earlier. We already got around 20 pips at the beginning of the session, but this is what we are looking for. If price fails to break above 1965, the short positions from 1965 having a stop loss at around 10 to 15 pips, and take profit 1 at 35 pips, which is 1961, then hold it towards take profit 2 at 70 pips, then finally 1953 at 120 pips. Okay, I hope I have helped Becky Posa. Yeah, so that is what we are looking at. Just look for confirms for sales at 1965, then breaks below 1961 will validate more sales to drive all the way towards 1953. So if you missed this trade, don't worry about it. Price will most likely tap it before it drops, and in the event it doesn't, just wait for this second setup that we talked about. Price comes and breaks below 1961, then you can execute. Don't forget to leave a like and subscribe and share the live streams. We are here from Monday to Friday. So here there's a second chance to now enter sales. You just have to watch price action cautiously. So that was your entry. So if price starts closing above 1965, you can manage your risk. For those who entered, you most likely are obviously at break even, stopped out at break even. But these are the second entries. So there's the move. So if you took this trade, leave a like. Always the retest, you can always count on the retest. So right now I think the moves up 10 pips. So as a risk averse trader, your stop loss should be at break even to make sure you don't lose any amount whatsoever. And if it takes you out, don't worry about it. There's always going to be another setup, if not in this session, tomorrow's session. So don't chase trades.
Here we go.
So right now price is currently going back to our entry. So if it breaks, or it broke above, so that's a break even trade, as you've seen. No one lost $1. You maybe lost it on commissions, but this is a break even trade. So let's remove this. That's a trade done. So remember, our analysis is that gold is just purely sales. Anything that's happening right now is basically pullbacks. So sales from 1965, you can re-enter if this candle closes below. Always be quick to close your trades and manage your losses, because you see you can now get another entry from 1965. So just watch, make sure this 1 minute candle closes below, then you can hold. So no trades yet till it closes below. So just give it seconds. Give it seconds. And that's why I like the 1 minute. You're getting 60 seconds worth of data, which can aid you in your decision making process. You can actually map out and understand if a trade is worth it or not. So right now, as you can see, no 1 minute candle has closed below, so we don't have any re-entries. So this would have been a loss if we had actually entered. Okay. So the only way to enter any more sales is if price closes below 1965 and holds below, fails to break above. So I'll just leave this here. Short positions with our targets at 1953. So you can come back and validate whether this trade was successful or not. No closures yet, no closures yet. Price is just teasing us at this point. Let us quickly catch a glance on GJ. So GJ, we also had we also wanted to see GJ pull all the way back down to 182,500 for us to execute our buys, but that is, as you can see, that's not the case. Price is slowly just chugging its way down, so we just need to exert patience and wait for price to actually drop all the way to 182,500. So let me just update our stream journal. I think this was a successful day because we caught a trade, a win, and a break even. We haven't actually caught any loss. So there was a week I wasn't available since I was moving. But if you want to see this pip count, it's in the description. So we had gold fails or full risk. So we took, I closed my full trade at 15 pips. So here are our stats. For July, we've taken 8 trades, 4 losses. Our win rate, so we haven't actually recorded the break-even trade. Let us quickly record that. It's a gold sell. Win risk. So this was break-even. Break-even. Okay. So here are our stats. 8 wins, 4 losses, 1 break-even, and 336 pips for a win rate at 66% win rate. So yeah, that's probably it. But monitor gold at 1965. So see you tomorrow.